Welcome back, dear traders. This is a fresh review of the US market. Our experts are ready to bring to your attention up-to-date news and forecasts. Despite subdued activity in the pre-market trading, Wall Street's main indexes managed to kick off the new trading week with gains, albeit modest. Thus, the Dow Jones closed up 0.45%, the tech-heavy NASDAQ added 0.62%, and the benchmark S&P was up 0.4% to close at 4,297. Wall Street indexes spent today's pre-market trade close to zero, moving sideways and showing minor changes from a minus 0.01 to minus 0.23%. As for the trading range, the S&P 500 was trading between the levels of 4,270 and 4,320 points. Despite a rather strong market reaction to downbeat economic data from China, US stocks advanced on Monday, mainly by technology and consumer stocks. However, the S&P energy sector was among the worst performers due to lower oil prices. Nevertheless, the NASDAQ and the S&P managed to get back on a track to extend their winning streaks to 5 weeks. Notably, media and entertainment giant Walt Disney shares climbed to 2.69% on Monday after CNBC reported that hedge fund Third Point had disclosed a new stake in the company. And this news helped the Dow Jones advance. Today, the focus of investors will be on such major retailers as Walmart, Target, and Home Depot, two of which have already reported their second quarter earnings. In particular, Home Depot reported quarterly comparable sales above Wall Street estimates on steady demand for home improvement goods from builders. Home Depot's comparable sales rose 5.8% in the second quarter, while analysts predicted a 4.9% gain. Net sales for the largest U.S. home improvement chain climbed to 6.5% to $43.79 billion compared to estimates of $43.36 billion. Net earnings increased to $5.17 billion from $4.81 billion, and Home Depot's shares fell 1.5% in the pre-market trading as the company maintained its outlook for fiscal 2022. Walmart, the world's largest retailer, also reported its earnings. The company raised its outlook for full-year earnings but said that it now expects fiscal 2023 adjusted earnings per share to fall 9 or 11%. Walmart's total revenue advanced 8.4% to $152.86 billion in the second quarter, above analysts' expectations of $150.81 billion. Sales at Walmart's U.S. stores rose 6.5%, beating its prior forecast of a 6% gain. The retailer reported inventories of $59.92 billion at the end of the second quarter, still 25% above last year's levels. Notably, the company's stock, which has fallen over 8% this year, rose 4% in the pre-market trading. Shares of rivals Target, Costco, and Best Buy also edged higher on the news. Speaking of mega-cap companies, Apple, Tesla, Microsoft, Amazon, and Meta were mixed in today's pre-market. Shares fluctuated between modest gains of 0.76% and declines of 0.35%. Besides, Target's earnings report and fresh macroeconomic indicators remain to be seen later. Today's calendar includes data on housing starts as well as industrial production. Tomorrow, the Fed is set to release minutes of its July meeting. In the meantime, the US dollar index continues to trade upwards. Today, USDX has already added 0.35%, thus hitting a high of 106.90. Its intraday corridor is defined between 106.70 and 107.20. Downbeat data from China's economy, which heightened recession worries, once again forced investors to shift their focus to the safe haven dollar. As a result, the US dollar index reached the highest level since August 8, while the euro posted losses for the second day in a row. The single European currency slid 0.13% to 1.0149, and thus the dollar keeps building up straight against major currencies. As for fresh macro data, building permits in the United States decreased by 1.3% to an annualized rate of 1.674 million in July, the lowest level since September last year, and compared to forecast of 1.65 million. In addition, housing starts in the country fell by 9.6% month-over-month to an annualized rate of 1.446 million units in July, the lowest since February 2021 and well below market expectations of 1.54 million. As for USD CAD, the loonie reached the 1.29 high and then dropped below the mark. Today, the asset has strengthened by 0.16% and is now trading at around 1.2882. The daily range for the pair is seen between 1.2860 and 1.2910. And in spite of increasing demand for the safe haven dollar, the loonie may encounter support from a fresh market data today as inflation has slowed down. Canada's annual inflation rate came in at 7.6% in July, down from a 39-year high of 8.1% hit in the previous months and in line with the market expectations. Transportation costs increased at a slower pace amid a sharp fall in gasoline. In the meantime, inflation continued to pick up for food, while recreation costs stagnated. Excluding gasoline, the CPI rose by 6.6% annually. On a monthly basis, consumer prices grew by 0.1%, the slowest increase since December 2021. In spite of a slowdown in consumer prices, inflation is still far from the Bank of Canada's target level of 2%. Speaking of crude, prices are consolidating today, trading mixed near February lows. Brent fell by 0.21% to $94.87 per barrel, while WTI futures rose by 0.02%. Meanwhile, Bitcoin is still bearish. It traded sluggishly during the day, hovering between $23,800 and $24,200. Other altcoins edged lower as well. Ether is now growing faster than Bitcoin. The digital asset has been in an uptrend for 6 weeks in a row, up by around 113% from the low of $880 to $1,877. At the same time, BTC has gained just 37% since for June low. As for the daily outlook for the flagship cryptocurrency, it's expected to trade sideways in the range of $23,400 and $24,200. And this has been our daily review of a US trade. Have a nice trading week, and we will keep you updated on the latest developments in the market. See you in our next video. See you tomorrow.